Hello, good morning. Welcome to Core Finance. I'm Matt Brown. I'm joined by Ryan Littlestone, who is a trader at Forexflow.live down the Skype pipe. Happy Monday morning to you, Ryan.
Yeah, happy Monday to you as well, Matt.
Right, markets, well, look, we're in this week before Christmas. Sometimes nothing happens, but sometimes we actually see a bit of volatility. So we're going to look at two currency pairs that hopefully may excite the FX space this week. Starting off with the Aussie versus the dollar. We've talked about this over recent weeks. Are we finally breaking out of this trend?
No, I don't think we are.
The downside trend that we've seen, obviously, moving up.
Yeah, we've had a slight reversal of that, but we've hit one of those big levels that we spoke about on the way down, around the 77, sort of 77, 50, 60 area. It's one of these big long-term levels that's been in play for some 2 years, nearly 3 years now. And we had the break below, and that was decisive. Decisive in terms of going down another couple hundred pips, but we have reversed that minor trend, but we're hitting these big resistance levels now, which when you get former support levels that were big, they become resistance once more. It was resistance, as I say, going back a couple of years. So it's another big level to watch on the way back up. And we saw a test on Friday that held very strongly around 76.90. And, we've dropped back from that. The techs all line up. So if we're going to see a real trend break, we want to see that 77.60 area broken properly and then held as support. But in the meantime, while markets are thinning out a bit and liquidity is dropping, those are sort of big levels you can lean against, and because there's not going to be many people in the market who's going to want to push anything too far this time of year. And
from a trading perspective, are you looking for a break above that moving average 76.95? Would you put a long on, or as you rightly say, you're just trading against that level? If you get up there, maybe short it and look to take some short-term profit.
Yeah, well, I would have looked to short it. If I hadn't been out with you guys on Friday, then I potentially would have shorted at 77. But I'd rather share a beer with you guys. But that's the sort of trade I'm looking at. Short into 77. Keep a stop fairly tight. If we do break into 77, look how we go. You can trade the break and go long, but keep your stop fairly tight in case it's a fake out. You'd keep a stop maybe between just below 76.80. But you really want, if 77.60 breaks, that's when you possibly got signs of a change, a proper change in trend. And if that happens, then you want to see that 77, 77.30, 77.60 area. You want to see it become support. If it becomes support, then you've got confirmation of that break. Then perhaps we're looking at hitting up to 78 again. So you can trade it either way. That's the beauty of markets. You can trade a short into the resistance, or you can trade a break, as long as you manage the trade properly and keep your stop losses tight in case it's a fake move.
Very sage advice. Moving on to the dollar-yen, a little bit of a favourite. Are we going to have a bit of excitement out of this pair over the next week or so? Something to write home about, or have we got a head and shoulders forming?
There's a potential for head and shoulders. It's not something I look at too keenly. We may have some action around the Bank of Japan meeting later on, but if the other central bank meetings are anything to go by, then it's going to be another bore fest. But again, we're going to be watching for changes in language, any minor changes towards inflation targets and QE and things like that. The market's going to potentially jump on. But these bank meetings at towards the end of the year is just what we call a punt exercise, where they don't want to ruffle any feathers and they'll just kick everything into the new year. But it still gives us some trading opportunities. While we're below 113, we're hearing today that there's some very strong offers, sort of 112.80, 85, and into 113. The Japanese exporters are layering up some offers, and that's worth paying attention to, because when markets are fairly quiet, when there's not a lot going on, then those are the types of levels that hold a bit more. But we've got a strong support area down at sort of 111, 70, 80, that sort of area. We've got a few moving averages down there, daily moving averages. It's been a prior support point previously. It's a pretty strong area. So again, while we're having these lower liquidity times in markets and there's not much movement, if you do tend to hit these big technical levels, they tend to hold much stronger when there's lower liquidity, because that's where most of the orders, most of the bids or offers are placed. So, you know, I think we're walking probably a 113 to that 112, 111.80 area. It's going to take something to shift this out of that range this week. But as I say, the Bank of Japan later on this week, it could potentially move the market quite a bit. But this is also a pair that or the yen's a currency that I'm going to be looking at a lot next year. You know, we've got the Fed who are more or less normal now in policy. We've got the ECB who not going to do anything potentially until September. The Bank of England, no one's really expecting a rate hike for a while now. And it's the Bank of Japan who's still going on full steam ahead with QE. And that's something that I think they're going to have to look at and the market's going to pay attention to next year.
Well, one to look out for 2018. But before we get there, in the meantime, Ryan, thanks very much for joining us here today on Core Finance.
Thank you.